You're standing at your terminal during a slow Tuesday afternoon, running a routine dormancy report because your branch manager asked you to clean up the account list before the quarterly audit. And there it is, on line 214. An account with $340,000 in it that hasn't had a single transaction, deposit, withdrawal, or login in 11 years. No beneficiary contact on file. No next of kin listed. The original account holder's last known address is a house that county records show was demolished 6 years ago. You sit with that information for exactly 4 seconds before your brain starts doing the kind of math it's never done before. You're 31, 3 years into a job you took because it was stable, not because you loved it. Teller, then head teller, now assistant branch operations lead at a regional bank in a mid-sized city. $52,000 a year after 8 years in the industry, which still isn't enough to cover the student loans from a finance degree you thought would open more doors than it did. Your co-worker Marcus, who trained you when you first started, still works the counter 3 days a week, even though he's been offered operations roles twice and turned them both down. He says he likes the simplicity of a job where you help someone with a problem and then it's actually solved. No ambiguity. No politics. You've always found that a little limited as an ambition. You want more than a counter and a name tag with 11 years of seniority pins on it. Dormant accounts follow a specific legal path. You learn quickly once you start actually reading the compliance manual instead of skimming it. After a period of inactivity, usually 3 to 5 years depending on the state and account type, the bank is required to attempt contact. Eventually, the funds escheat to the state's unclaimed property division, where the original owner or their heirs can claim them indefinitely, sometimes decades later. It's a slow, bureaucratic process. The accounts sit in a kind of legal limbo for years before that transfer actually happens, monitored loosely, audited occasionally, but rarely scrutinized line by line the way active accounts are. You start reading account 214's history more carefully than your job requires. Then you start reading 4 more like it. Then you stop being able to look at the dormancy report as just a report. The first move you make isn't taking anything. It's smaller, almost clinical. You flag account 214 as pending internal review. Do not escate yet. A designation you have legitimate authority to apply as part of cleanup. Buying yourself time before the state process would otherwise pull it out of the bank's hands entirely. Nobody questions the flag. Dormancy reviews get flagged like this constantly, for genuinely boring reasons. You tell yourself you're just exploring whether this is even possible, not committing to anything yet. The way people tell themselves they're just looking at a weapon in a store window. It takes you 3 weeks to find the actual mechanism, and it's almost disappointingly simple once you see it. Internal transfers between dormant accounts and a suspense account used for routine bank corrections, fee reversals, misapplied deposits, rounding adjustments. Don't trigger the same alerts as transfers involving active customer accounts because the system assumes dormant account activity of this kind is internal bank housekeeping, not customer-initiated movement. You test it once with $40, moving it from account 214 into the suspense account and back out again over 2 days, just to see if anything flags. Nothing does. Your hands are steady doing this in a way that surprises you. A decision feels different once you understand exactly how it works, instead of just theorizing about it. You take $6,000 the first time, structured across 3 separate suspense account movements over 10 days, so no single transaction looks unusual against the account's history. Then routed into a shell transaction tied to a fee reversal code that on paper explains why the balance moved at all. It lands eventually in a separate account you opened at a different bank under your own name, described in your own head as a loan you plan to repay before anyone ever notices, though some part of you already understands that repayment was never actually the plan. Just the story you needed to tell yourself to make the first withdrawal feel reversible. Nothing happens. No call from compliance. No flag from the state. No question from your manager. The quarterly audit passes without a single mention of account 214, because dormant accounts of that size get sampled, not individually verified, and yours simply wasn't in the sample that quarter. That's when the real shift happens. Not in the amount you take, but in how quickly the fear turns into something closer to confidence. You start treating the dormancy list the way Marcus treats his counter cue, methodically, professionally, except your professionalism is aimed at extraction instead of service. Over the following year, you identify 11 more accounts that meet your informal criteria. Old enough that heirs are unlikely to ever inquire. Large enough to be worth the structuring effort. Dormant long enough that any activity reads as routine cleanup rather than theft. You take amounts that scale with the account size and the length of dormancy. Never more than 4% of any single account's balance in a given quarter. A number you settled on after modeling out, almost academically, what a forensic auditor would consider within normal fee reversal variance if anyone ever actually looked. By month 14, you've moved just over $210,000 into accounts under 3 different names, 2 of them belonging to family members who have no idea what the money actually is, told instead that it's consulting income you're routing through them for tax reasons. Marcus notices something, though not the money. He notices you've started dressing differently, driving a car that's a step up from what your salary should support. When he asks, half joking, if you won the lottery, you laugh it off with a story about a small inheritance from an aunt he's never met. He doesn't push, because pushing isn't how Marcus operates. He mentions once, almost as an aside while closing out his register at the end of a shift, that he's always been a little afraid of anything at work that feels too easy. That easy money in a bank, of all places, tends to have a shape to it eventually, even when you can't see the shape yet. You take it as one of his usual small-town cautions, the same instinct that's kept him at a teller counter for 11 years instead of chasing the operations roles he's been offered. You don't consider, even once, that he might be talking about you specifically. The bank's fraud detection system does eventually flag something, 18 months in, though not you directly. A routine software upgrade adds a new pattern recognition layer specifically designed to catch structured transfers through the suspense account. The exact mechanism you've been using. It closes a loophole that, as it turns out, several other employees across the bank's regional branches have also discovered independently over the years, though none as methodically as you. The upgrade doesn't retroactively flag your past transactions in a way that triggers an immediate alarm. It simply makes the loophole stop working going forward, silently, without incident. The same week you are planning your next round of withdrawals. You stop, not out of conscience, but because the door you'd been walking through for 18 months quietly closed itself, and you're smart enough to recognize that trying to force it back open would be the first genuinely reckless thing you've done in this entire process. You leave the $210,000 exactly where it is, spread across those 3 accounts, untouched for over a year, waiting to see if anything surfaces. Nothing does. No audit ever traces the pattern back to the suspense account movements from that specific 18-month window, because the software upgrade that closed the loophole also, coincidentally, changed how historical suspense account data gets archived, and the older records simply aren't queried with the same scrutiny the new system applies going forward. 2 years after the door closes, you leave the bank entirely on good terms with a reference letter from your branch manager praising your attention to detail during your time in operations. A description you find almost funny in a way you don't let yourself laugh at out loud. You take a compliance-adjacent role at a fintech company, ironically enough, a job that pays more than double what the bank did, and that specifically values your background in operational risk awareness. Marcus stays at the counter. He's there the day you leave, shakes your hand, tells you he's happy for you, and means it, Because Marcus has never once had a reason not to mean the things he says. You think about account 214 sometimes. The original number on line 214 of a dormancy report on an ordinary Tuesday. About the person who opened that account decades ago and never came back for it. Whoever they were, wherever they went. You don't know their name. You never let yourself learn it on purpose, because knowing it would have made the 4 seconds of math you did that first afternoon a great deal harder to finish. You don't get caught. There's no forensic accountant across a conference table, no board vote, no headline. The $210,000 sits quietly. Most of it still untouched years later. Less because you're saving it for something specific, and more because spending it would mean explaining it. And you've built a life now where nobody asks. Marcus still calls sometimes, mostly to talk about nothing. A fishing trip, a kid's baseball game, the ordinary texture of a life built entirely out in the open. You always answer. You're always glad to hear from him, in a way that surprises you every time, given everything you've kept from him. He has no idea what you did, and he never will, because the version of the story where he finds out doesn't end the way you'd expect it to end in a cautionary tale. There's no scene where he looks at you with disappointment. No reckoning. No moment where the math finally comes due. Some doors just close quietly and stay closed. Some people carry an 11-year-old dormant account number in their memory the way other people carry an old phone number. Half forgotten, mostly harmless, occasionally surfacing at 3 in the morning for reasons you've stopped trying to name. You don't feel free, exactly. You also don't feel like someone still running from anything. You just feel like someone who found a door nobody was watching, walked through it carefully, and then watched it close behind you before anyone else even knew it had been open.